when everybody in your business asks you if they can spend money, it's probably a sign that you don't have a well-budgeted plan. When someone's knocking on your door saying, Sam, I'd like to buy this piece of software for $633. And you're like, I don't want to talk about this. I want to move on. That's a good sign that you need a finance function.
Search Party is sponsored by Avid Bank, Boulay, Mayer Brown, Plexus Capital, and Oberle. The lead sponsor is Next Coast Legacy. Hello and welcome to Search Party. I'm David Snow, your host. And today we're joined by Eric Lougher and Sam Swan of TaskRay, Emily Young and Jake Bitz of Boulay, and Anthony Walker of Next Coast Legacy. Everybody, thanks for being here. I'm really looking forward to delving into an important topic, which is the importance of upgrading the finance function in a lower middle market business. This is of particular importance to the Entrepreneurship-Through-Acquisition community because there's a belief that there's a huge opportunity to create value by improving the back office, improving the finance function of lower middle market businesses in which entrepreneurs through acquisition invest. We also have a great case study to talk about in the form of TaskRay. TaskRay is a ETA-backed business. Eric Lougher and Sam Swan are entrepreneurs through acquisition who are now improving the operations of TaskRay, which is a project management software business based in Denver. But why don't we start out with a question for Anthony Walker. He at Next Coast Legacy backs ETA searchers, helps them find high quality lower middle market businesses in which to invest, and then helps to improve the operations of those businesses for all the partners that are involved. Anthony, with regard to the finance function, why does that loom large as such an opportunity for lower middle market businesses?
It's interesting. So for the companies that we typically acquire, it is often common that the finance function is an area that's been underinvested in. These are typically founder-led businesses, have not taken outside forms of capital. There was a founder that was probably really good at building or developing a product within their particular area, but it is uncommon that finance is the primary focus of the organization. And so as a result, they have really measured the performance of their business by how much cash is in the bank account, right? They aren't looking at sophisticated metrics or KPIs. And so for us, stepping into these assets, that's a real area of opportunity. Better decisions are informed by data. And one of the most consistent areas of investment that we often make when we acquire a company is to upgrade the finance function and to improve the quality and the quantum of data that is being received both by the CEO and CFO of the business to inform strategic decisions, but also the board of directors to be able to have visibility into the performance of the asset. It's a very, I think, important investment that ultimately can result in tremendous value creation opportunity over the long term as well.
Thanks, Anthony. Jake and Emily from Boulay, a searcher comes up to you and says, hey, I just bought a business. What do you recommend for the finance function?
The first step is know the business. Know where it is today. Know where you want it to be tomorrow, a year from now, 5 years from now. Every situation is going to be different, but really understanding yourself, where you are, where the business is, and figuring out where you're going to go next.
Is it usually the case that a CFO or a controller needs to be hired, that's a key position that often makes a big difference?
I'm always going to say yes, because that is the wheelhouse that I work in. You don't want somebody to come in and hound you on like what you haven't done to get your financials to a good spot. You want somebody who's coming in the door. Maybe it's a consultation type engagement to help you out. But long term, the solution is, can we have somebody come in here as an outsourced controller or a CFO, kind of clean up shop at the same time, and then continue flying that plane and figuring out the long-term strategy?
And then that team is going to assist with standardized processes, which I think is the first big step that you're going to be taking on, is standardizing the processes that you need in place for your finance function and really getting the data that you need for your reporting and that your investors are going to need, that your lenders are going to need. And those standardized processes help you get that clean data every month, every quarter as you need it.
Sam and Eric, both of you have spent a lot of time in the lower middle market because you are entrepreneurs through acquisition. What have you come across again and again in your observations of the way these smaller businesses are set up?
Lower middle market is an area where business is kind of done from the gut. If you have to buy inventory or if you have to have a J curve to the investment to get that customer online, all of those types of questions of how does working capital work within that business really hasn't been addressed other than, hey, I have money in the bank to do this or I don't. So coming in and actually structuring and understanding how the business operates, standardizing that operating model, and then also using the finance function to actually inform a decision of this is a good deal or this is a bad deal. And I like this customer and I don't like this customer and I like this price and I don't like that price. You do need a financially minded individual. Doesn't mean that necessarily the searcher has to be that financially minded individual. They just need to know what should I be thinking about and what questions should I be asking, and then have an all-star like Eric behind you to say, hey, here's the data to go make that decision.
I think to some extent, the sequencing of priority in terms of like, hey, there's so much that we could do. What is it that we really need to do first? Like, are you looking at good data, or do you need to go back and like really reconcile deferred revenue by customer? And then from there, where do we kind of go to make sure that we're making progress towards a robust finance function while also operating the company and driving sales and things like that?
The seniority of the hire and or whether or not that is outsourced versus insourced often depends on the size of the company. Can it afford that? Right. And the degree to which we need financial reporting, or do we need strategic finance direction and help? Right. And I think those are two very different things. And they're two very different personas in a finance professional that enable you to get that depth of information. And so, at the board level, we're always kind of constantly evaluating who's already in place at the company. Is it entirely outsourced? To what degree does the CEO have a financial background that they can kind of lean in and carry the water on that, at least initially? And or do they need additional support and resource at the senior management level to take on some of that responsibility? And, TaskRay was a great example where we kind of looked around the company and said, Sam is doing a great job and operationally running the business well, but he's doing so with, one arm tied behind his back because he doesn't have access to quality data and information and a strategic finance perspective that Eric was able to step in immediately and bring. And I think that partnership has really enabled the business to thrive, but it wasn't immediately obvious to us exactly kind of what we were looking for in that senior finance professional initially.
When you step into the role of a CEO at one of these businesses, ultimately finance is a lagging indicator of the success of the business. And it is a scorecard. And as a CEO, you're responsible for that. But you're also responsible for the leading indicators coming into a business, first and foremost, knowing your customer and getting really close to your customer and understanding what is the value, not the money that you get from them, but the value you are bringing your customer. I would put as your most essential due diligence and your most essential first week activities as a CEO. Quickly followed by, now that I know this, are we representing what the company has done in the last month, quarter, year correctly to our investors in a financial package? Finance is the means of control, and ultimately having strong operations and a consistent way of doing business and a way that you handle everything and a way that something gets double checked from a sales professional to an operations professional to a finance professional. That's all critical so that at the end of the month, it's right. And you have good data and you are representing the company in the correct way.
Well, why don't we jump into the story of TaskRay before we get to how you assessed the finance function? Maybe Sandy, you could just start with, give us the executive summary of your ETA journey, what you were looking for, what you liked in TaskRay, and what you learned.
I started my search in early 2019. I acquired TaskRay ultimately in October of 21. So I was a long searcher. Granted, there was a pandemic in between. At the time, there's this very small niche industry called customer onboarding for tech businesses. Ultimately reached out to, 15 or 20 different companies that were in and around this space. The founders of TaskRay were just in a position where they had run the business for over 10 years and they were ready to do something different. It was a big deal. We had a higher enterprise value than the standard search deal. So I had a number of gap checks to go find. The quality of the business was also a little higher than, say, the standard search deal. We had a little bit more rigor in place, a little bit more process, a little bit more financial function, but it ultimately culminated in me acquiring TaskRay in October 2021.
Let's take a quick break to learn about a partner for growth in the lower middle market, Plexus Capital. Every Plexus Capital investment begins with a foundation of trust. The team approaches all partnerships through the lens of its CARE values, grounding principles that guide the team's decision-making. Care about our people. Always do what's right. Respect each other and our partners. Expect excellence. Plexus Capital has been providing debt and equity capital to lower middle market businesses since 2005 and began partnering with the search community in 2010. Since inception, the firm has deployed over $2.4 billion into over 190 small businesses. Given the team's expertise and track record, you could say Plexus Capital has large firm capabilities with a small deal focus. Look for commentary from Plexus Capital professionals in episodes of Search Party. Okay, now back to the episode. Eric, from your point of view, can you talk about getting contacted about the business, what you liked about it, and where you thought you could make a difference?
Initially, when I talked to Sam, I think he was looking for a CFO. And I had spent the last almost 5 years as the CFO of a company called Ratio, which was a mix of hardware and software with a consumer aspect, but I did have some experience in SaaS as well. But I was like, maybe I can help you find the right person. I'm doing some other stuff. And eventually that role shifted to more of that chief of staff, partner, kind of business partner mindset, not just like a pure finance aspect. It became a lot more interesting to me. And as I got to know Sam and aligned with him on his vision, that was a big appeal for me. There's so much more that goes into a more strategic CFO in terms of the operations of the business, the strategy of the business, the operating model of the company, how teams work together, how you set goals, that I think is appealing for someone in that CFO role. If you're just looking for just a pure CFO in the sense of just the numbers and the financial controls and reporting, you probably don't need someone full-time. It won't necessarily feel like the right fit in a full-time role. For me, what was appealing also is like, it felt like a clean sheet of paper. Like, even though the company had been around for almost 10 years, it felt like, okay, I could take a lot of the stuff that I learned, take the things that I think work well for this culture and this company, and align that to a new set of people who are hungry to go take the next chapter.
How did you make the decision to add a partner versus just adding an addition to your finance function?
The first time I went through budgeting, literally, the first time I went through budgeting, I was like, this is insane. Our quality of data was flawed. We didn't really have a cohesive financial model. I went to the team and said, hey, we have to form a budget for next year. Why don't you tell me what you need? Don't do that. Okay. And so, I came in with, hey, we're going to hire 35 people next year. And, we're going to go spend another $15 million. It was crazy. How do I figure out where I want to put my change in deferred revenue, invest that capital thoughtfully into the business that's going to have the biggest return? And that process requires someone who can be incredibly financially minded. They can be a person who is thinking about things in terms of dollars and cents. Hey, how much do I need to spend to acquire a customer? That process for me was the first time it was a struggle. And that to me was a pretty clear indicator that I need someone who can do this with me. And I need someone who can think about these things on a constant basis. So having this function well maintained and thought out was so critical to the business.
I think it's impressive that you had that level of self-awareness or that moment of self-realization of knowing yourself, knowing what you know, knowing what you don't know, knowing the business well enough to figure out what that gap is and what the best route is to fill that.
I knew what good looked like. I knew what I wanted it to be in the long run. And ultimately, I wanted leading indicators. I wanted a company scorecard that we track on a weekly basis where everybody knows where the business is. I want these things in place. I want budgets for my team. And having the controls to do that was just something that I was not prepared to go do. When everybody in your business asks you if they can spend money, it's probably a sign that you don't have a well budgeted plan. When someone's knocking on your door saying, Sam, I'd like to buy this piece of software for $633. And you're like, I don't want to talk about this. I want to move on. That's a good sign that you need a finance function.
I actually don't remember what the financial reporting packet looked like before, Eric.
Good.
But I vividly remember the first monthly package I got from Eric and looking at it and be like, oh, this is great. It's really good.
Yeah.
The visibility that we gained was tremendous. And, Eric, maybe the question for you is your first 100 days as you came in and you were evaluating kind of the state of the state. What did you notice? What were some of the key things that you immediately wanted to improve upon?
There's a lot that goes into the people aspects of like understanding the leadership team that we have, what they understand about the vision, the strategy, like some of those pieces, so that you can really like understand where this company is going and what the strategy is, so that you can align the finance function to that. So if you just go in and you're like, okay, well, I just want a standard package, like it may or may not make sense. So I think like assessing and really understanding the company, its position in the market and what that ideal customer looks like, getting a lot into the customer data itself in terms of the unit economics, the lifetime value, what do those pieces look like? And then kind of coming back and saying, okay, blank sheet of paper, what is the right financial package? What does the right financial reporting look like for this company? What are the most important metrics that we want to see here? We benefited a lot from just like, okay, starting over, that file's in the trash. I'm restating everything historically and building this, knowing that I'm going to be dealing with this every month. What's a way that we can build it that's a little bit more automated and that fits into a longer term horizon than just like, oh yeah, let me add a tab for this. When we came into TaskRay, it was like, there was nothing forward looking. Like they had some metrics for the past, but like what happens next month? What are we doing 3 months from now? When do we run out of cash? Like, what are those questions that we want to know? Well, how do we integrate sales into the forecasting process? Starting from scratch on the model was an important one.
The self-awareness part too is key on, you know how to drive the business high level, but you can't do everything. If you could both maybe talk about your experiences and how they have aligned for this magical moment, that to me is kind of the real like success story here is, you couldn't do it. You found somebody that could do it. That past experience drives that decision, right?
My background is a little bit different. I was a manufacturing executive for a good chunk of time and an engineer before that. I'd also have a finance MBA from UCLA. So I have a sense of capital structure and what it should be and how I want the business reporting data. But if I'm being really thoughtful and how did this work out, I would say that a lot of it is luck. It's having a good sense of people. It's me and Eric having hours and hours of conversation before he even stepped foot in the business. When someone comes into your business and you've hired them to be your right hand or to be even smarter than you in these areas, you have to let them do it. So for me, when he came into the business, it was not something where I sat next to him for every day of the next month and worked together on what we were doing. It was like, Eric, go do what you need to do. And depending on how he progressed was going to be like, either this was a giant failure on my part and I hired the wrong person, or I hired exactly the right person. I'm getting 10 times better information than I thought I was going to get. So I think you're always taking a chance when you're hiring someone.
Eric, you mentioned earlier about priorities when you first come in. How did you set those first priorities and what were they?
My role is split between CFO and COO. On the finance side, like part of the problem is when Sam acquired the business and when I joined it, we had one person entering in all the information and also like reporting on everything. And it was like, okay, we actually need to hire someone and set those controls and have like the bookkeeping aspect of this more set. So entering in AP and doing close and like all that sort of stuff, while also trying to think strategically about the business and like what this needs. The priorities for the finance function was that separation of responsibility, free up my time so that I could think more strategically as a CFO.
Anthony, if you wouldn't mind, can you paint a picture of what sort of the classic archetype is of a lower middle market business in need of a finance function upgrade?
Commonly, what you'll see is a business owner that is wearing multiple hats. And oftentimes they are CEO and CFO and CTO and chief compliance officer and doing all of the things required to run and manage the business on a day-to-day basis, but certainly not being effective in that management. QuickBooks is often the source of record for everything financially related in these businesses. There is usually some combination of an improvement in technology that also goes alongside kind of additional people. Most consistently, there is not a CFO in place at the businesses that we acquire. There may or may not be a controller in place, but their primary role and responsibility is really just closing the books.
Jake, if an ETA searcher were to approach you and say, hey, I'm about to buy a lower middle market business, or I have acquired a lower middle market business, what's my first step in the finance function supposed to be? What would you say?
Are the books right? Is there good trust in the books and in the numbers? And you'll get that through the process of closing. But beyond the close, you go out 30 days, 90 days. What is the true metric that's going to keep you on top of that close and making the key decisions to continue that flow from that cutoff date? Figuring out what you need is the key from a finance perspective. It doesn't need to be a crazy robust role. If you're trying to figure out where the company will go short term within 6 months, have somebody short term focused who in your network could come in and do that if you don't have that person to help you get consistency and going the direction that the board wants you to attain and hit those metrics and results to make sure there's a return on this investment. Being in the actual day-to-day nitty-gritty, going through a full year of accounting, doing the tax, and also then having that investor relationship on top of it. There's so much there. So you have to put yourself in the shoes of what those investors want and hiring the key people and having that process put in place on how you close the month and how you report is the foundation.
Figure out where the gaps are that you need to fill and what the best way to fill those is going to be, whether it's hiring in-house, full-time controllers, CFO. What are your needs? What are the business needs right now? And how can you address them?
The other things I would tell searchers is use your board. Your board's a really good judge of people. They've done this before. They also are a really good judge of what a company needs to be more successful. So if your board is saying you need a better finance function, this is not good, you should listen, and that should be a priority. The last thing I'll say is ethics in search are so important, and it's up to you to make sure that you are holding yourself to the standard of recognizing revenue in a conservative, smart way that shows your investors an accurate picture of what's going on in the business, and making sure that you share that same principle with your CFO is so important.
Eric Lougher and Sam Swan of TaskRay, Emily Young and Jake Bitz of Boulay, and Anthony Walker of Next Coast Legacy. Thank you all for joining Search Party today and sharing your insights. And I hope I can have you all back on Search Party in the future. Search Party is sponsored by Avid Bank, Boulay, Mayer Brown, Plexus Capital, and Oberle. The lead sponsor is Next Coast Legacy.